Okay, I think it should be live here. Just bear with me 1 second. Okay, so that should be live. All right. So good morning, America. I hope you're well. There's no trading in the UK today. Not that it should matter that much. Okay, I think I got everything up and running. Nope, there's still one thing missing. Let's get rid of that. Right, I think we're up and running. So I'd like to show you something. I'm going to do that here. Nope. How do I do that? I'm just going to have to do it on this chart here. So if I look at a 30-minute chart of the Nasdaq, then the range from Friday could be described as follows. So that's the range. And what you're then seeing subsequently is the market trading lower during the night. And just here, when we are about to open, which is here, the market is still within the range. Sorry, it's just borderline within the range of Friday's range. And that's quite important, because when a market opens gap up or gap down, you can define it as two different kinds of gaps. There's a gap where we are open higher or lower as defined by the closing price the previous day, but it's still within the context of the previous day's trading range. And then there's gaps that takes place outside of these ranges. It's a little difficult to show on a charting package like this, because this charting package that comes with the brokerage platform has with it an overnight range. I'm about to release a piece of software tonight, and we are working on actually being able to remove that so that it could look something like this. So that the US techs, or the Nasdaq, is currently trading at 19,950. Which is about here. And that's interesting because it means that it actually opened below the range. So what I would normally expect to see when a market opens gap down and it opens below the low of the previous day's range would be more downside. However, when the market immediately begins to rally into the trading range, you, whether you like it or not, statistically, this rally that you're seeing here in the Nasdaq will fail. It's not very frequent that you'll see a sustained move. If you do, then you'll know after approximately 2 bull bars, which is why I'm still giving it the benefit of the doubt, but you can see I'm barely in profit on a trade that I executed earlier. Now, if I look at the same scenario in the Dow Jones index, and I go to a 30-minute chart, so see how the Nasdaq is actually coming back down again. If I look at the Dow, then the range is approximately from here up to here. I can draw it if you want. So this is approximately the range for the Dow Jones index. And so when the Dow opened from Friday, so when the Dow opened this morning, you should be able to see that we actually opened inside the trading range. And when that happens, the odds are much higher that we're going to see continuation for a gap fill. The reason why I bought the Nasdaq was because I closed on Friday night. I closed my swing long Nasdaq up here for I don't know how many, 12, 13, 1400 points. It was a really big trade. No, it wasn't a big in size wise, but point wise it was very big. And when I then saw it open down here, I thought I'm gonna see if I can somehow buy a double bottom. And with the Dow, when I saw that we were going to open inside the trading range, I just placed a buy in the Dow, hoping that we would see a push higher. I will publish material on this because I think this is a topic that deserves some special attention, with of course the usual caveats, what to do when it doesn't happen. So I got a loss of 40 points in the Nasdaq and a gain of 60 points in the Dow. I was looking at the scoreboard of the Robins Cup. Do you follow that? And I was thinking, I don't recognize any of these names from last week. You know, over here. I think I took a screenshot of it, but yeah, no, I just could have sworn it was some completely different names. It's like, how can you have such big swings? Strange. Anyway, I am still researching this phenomenon. It's delightful to create material for one's training book. So, okay, how would you deal with this? If I give off an air at times that I know everything, please trust me when I say I do not. This morning, for the US, for the European, I posted this chart here and I said, this is the DAX, the first Monday in May last year. That's relevant because the UK has a bank holiday on the first Monday in May. It's called a May bank holiday. And I know that because I used to live in the UK, and it was something that one would look forward to, that there were two holidays in May. The first Monday and then towards the end of May. So last year, obviously, the FTSE was closed and I showed the streamers this morning what the DAX had done on this Monday last year. And I said, wouldn't it be nice? and yet I was playing this area here and I had free trades. I traded in small size because I was tired. I still am. You can probably hear it in my voice. And I tried to trade the range. And I did actually trade the range really quite well, except I kept getting stopped out for nothing. And then I lost 16 points. Actually, it was 16 points loss and then stopped out for nothing. But all free trades had at a minimum 10 to 20 points profit. So I felt a bit stupid sort of walking away. But what I felt even more stupid was when I came back, I had another training session. And I looked at the DAX today and I'm thinking, well, that's a bloody replicate of last year. I mean, look at it. This did exactly the same. Well, minus obviously this point here. I don't know if it's going to sell off, but yeah. So, a little annoyed that I didn't just let it run. But there you go. I'm not saying that the history repeats, ladies and gentlemen, not by any means, but it did today. Very much so. So sort of bases this theory of gaps, I would expect the market to not break out from here. So we have a high at 19,961, and I think sellers will come in here. You might think, well, so why am I still long? Just because I'm trying to eke out a swing position. Whether I am successful or not remains to be seen. But on the theory of this gap here, I would expect sellers here. And we will, because I say that so dogmatic because anything can happen, but I do not expect the market to break higher. And don't think for 1 second I care if it does go higher. It's just, right? I'm more trying to teach it from a theoretical chart analysis point of view, basis around the chart. If you do get two consecutive really bullish 5-minute bars after the open, then I would say that there was more credibility to it. And I would go long, which in my case would mean I would add to the position. Yeah. So far, so good. My hypothesis is sort of holding up with sellers above 61. And yet here I am long. Yeah. I should put a stop loss in here, shouldn't I? The reason why I am sounding really defeated, I'm not defeated, I am just painfully fatigued after the weekend. And no, I wasn't clubbing in a discotheque till 5 o'clock in the morning. If only I was wearing one of those heart monitors during my training sessions on Saturday. And in one of the 2 segments that I had of exercising on Saturday, I burned about a little close to 1,000 calories. and my heart rate was in zone 5 for probably a lot more than it should for a man in my age. That was one of two. So here sellers did come in. However, there's equal opportunity here that we are simply just going to bob up and down in a tight trading range. It does not necessarily mean that we will go all the way down to the lows. I want to stress that. But this price action could suggest that we will be in a range for a while, at least in the Nasdaq. I would like to be a buyer of the Dow. I'm buying my Dow here at 41,094. I'm doing it because I want to be a buyer near where the open was on the first candle here had a low at 41,102, and I'm a buyer above, sorry, a buyer below this bar, expecting further upside. Probably don't need a 200-point stop loss though. There you should be able to see the trades. Here's the Nasdaq again, fighting its way back, and it's probably going to go up and make another double top here, but I don't expect a breakout. Rashan, thank you so much for reminding me. Yes, there is news out, and it is being released in approximately 5 minutes and 50 seconds. It is called the ISM services. What I could do with you, if you are interested, is how did the market react the last time. I really must clean up these charts. So you can probably see on your screen that the Dow has just popped about 20 odd points. So that's nice. So the last time that we had this news was on the 3rd of April. So if I go to the Dow on the 3rd of April, which I can here, let's do it on a 10-minute chart instead for. That was Danish that just crept in. I really must be tired. So on the 3rd of April, double checking, yeah, 3rd of April, we have news being released about here, and you see how the market pushed lower for the next hour, double top. I just want to show you that the Dow is actually doing quite well. So you can expect to see new highs, but you can also just move your stop loss to break even if you want. I actually forgot to post this in Telegram. I am all over the shop, ladies and gentlemen. I am really sorry. But those of you who are tuned in on YouTube, you'll be able to. Yeah, so I hope you understand what I did. I simply tuned out on a larger time frame, and I bought below the second candle low, expecting a push towards the highs. We have news coming out in a few minutes. The previous one was the 5th of March. So let's look at the 5th of March together. Here's the 5th of March. ISM is being released here. So as you can see, ISM doesn't strike me as a number that necessarily warrants a lot of attention. I think I'd like to take profit here on a double top, and probably just going to do this for myself as well. And there comes the retest in the Nasdaq of the highs, and as I said, I don't expect to see the market go above, and I will take my profit here. So I basically just flatten the book ahead of the news. I'm just going to take a moment. I think I need something to drink, and I'll be with you very shortly. Thank you. Hi, I'm back. Okay, so looks like the market took comfort in these numbers. But as you can see from the admittedly small sample that I'm showing you here, maybe you can't really see that. I would appreciate it if you couldn't, but the ISM number seems to often get reversed. I'll show you the 5th of Feb. There's the 5th of Feb spike and made new lows, but the market reverses. Does feel like though that my earlier statement about the gap and it's seeking to fill the gap because it opened inside is exactly what's going to happen. I got out too early, fair to say. Got out at 160. We're currently trading 100 points higher, so ahead of the news closed, and I would have been 200 points richer. Rule of 4 does not apply when the market is trading in hours except for the FOMC. So no rule of 4. Someone's asking me, what is this e-signal? It's a charging package. Nothing more. I wish you could see some of the questions I get asked. There's a person here who says, "Hello, sir. I have a question regarding backtesting. Do you perform backtesting? If so, could you please share your method with me?" How am I supposed to answer that? Yes, I backtest. The resource channel in Telegram is full of my backtesting. Rule of 4, school run, aggressive school run. The list is long. But how do I do it? There's no method to it. Do you know how I backtest? I ask myself a hypothetical question. So for example, this one would be a good one. When there is a gap in the market, and that gap means that you are opening below the range or above the range of the previous trading day, how is the market likely to react? And then, once having asked the question, I then go to work. This is not a strategy that I'm testing. This is much more aligned with how does the market tend to react and how do you trade it? Yeah. Jesus. Thank you, Sajid, for your very nice gesture. It's very kind of you. I imagine a Bloomberg terminal doesn't come cheap. Someone called S saying, do you trade for yourself more discretionary or mechanical? When I am not with you, Mr. or Mrs. S, I am a lot more discretionary. And ironically, not as disciplined as you might think, which is, it pains me to admit at times. And I can get really annoyed with myself when I'm not as disciplined as I should be. Callum wants to know how long is a length of a rope. I'm pretty sure Callum is trying to take the piss here. Thank you, Callum, but that is actually quite funny. That is actually you made me smile. Ladies and gentlemen, I think I should leave you alone. We made some money together, and I appreciate that I had some open positions when we opened. Although I would like to say that they were either losing me or break even when we started the broadcast. So read into that what you might, but they were. I'm just looking at the chart now. When I opened the stream, the Dow was break even and the Nasdaq was down 20 points. So if I get any messages from people saying, they were losing when we started, come on. Not that I get messages like that. Anyway, it has been a short session today for me. I hope that this perspective, which I will talk a lot more about at some other point, but I hope that it was at least somewhat useful to you. So that's me done. The account is a little better now than it was. Still got my bloody crude oil that doesn't want to do what I want it to do. Just take your loss, man. I'm so on the wrong side. Do you see that? Just so on the wrong side. All right, so 34,036. I've withdrawn 20,200, so we must be approaching the 55,000. I don't know what that is in percentage from 10,000, but I imagine it's what, 450%. So I'm a little bit ahead of these people here, but then again, I'm also trading with higher leverage. Whether that's a good thing or not, I don't know. Take care of yourself. I will be bright and sprucey tomorrow. I have no doubt. Until then, I just gotta get some serious shut-eye. You take care of yourself. Love you lots. All the very best, and thank you for today. Bye-bye for now.